Have you ever looked at the price of the Bitcoin and thought, is it too late to get in? Well, what if I told you that some of the smartest minds in finance believe Bitcoin could hit 200,000 before this year is over? Yeah, 200,000. And this isn't just a wild internet hype. It's tied to real economic data, fresh inflation reports, moves by giant companies like GameStop, and get this, even new crypto laws being passed in the US Senate. So what's going on? And is this a moment you finally need to pay attention to Bitcoin? Let's break it all down, step by step. In this episode, we are diving deep into the news behind Bitcoin's recent surge and why some analysts are now calling for 200k Bitcoin by year end. We will explore why a weaker than expected inflation report might be great news for crypto, how the Fed's next moves could send Bitcoin flying, GameStop's billion-dollar pivot to Bitcoin, the first ever stablecoin law clearing the US Senate, and why billionaire investor Paul Tudor Jones says Bitcoin belongs in every single portfolio. If you're new to crypto, don't worry, I got you. No jargon, no hype, just real talk about what's happening, why it matters, and how it could affect your money. Let's start with a big headline that kicked all this off. On Wednesday, the US Labor Department dropped its latest CPI report. That's a consumer price index, a key measure of inflation. Most economists expected price to rise about 0.2% in May, but instead we got just 0.1%. That might sound like a small difference, but in the world of markets, it's huge. Why? Because it sends a message. Inflation isn't running wild. The Fed might not need to keep interest rates high and lower rates, meaning more money flowing into risk assets like Bitcoin, for example. Lower inflation, more room for the Fed to cut rates, lower rates, cheaper money, more investing, and bigger upside for Bitcoin. If Bitcoin breaks out the 105k or 110k range with conviction, we could see a sharp move to 120,000 and potentially hit 130k by end of summer. If momentum keeps building, 200,000 by year end is firmly in play. Well, firmly in play, that's a bold call, but it's not just the vibes. Let's dig deeper. So what's the Federal Reserve got to do with Bitcoin? Well, everything. See, Bitcoin is often seen as a digital gold, a hedge against inflation, but it's also what's called a risk-on asset, meaning when interest rates are low, Bitcoin tends to fly. Why? Because investors start reaching for higher returns. They look beyond savings accounts and government bonds. They start exploring stock, crypto, especially Bitcoin's ETFs. After the soft CPI report, markets are now pricing in 2 full rate cuts this year. That's more than we were expecting just a few days ago. In fact, October is now fully priced in for a cut, and September has a 70% chance. And every time those odds tick higher, so does Bitcoin. So if the Fed pivots toward easing, cutting rates instead of raising them, Bitcoin could go vertical. Imagine Bitcoin breaking 120,000 in July and setting sights on 200,000 by December. Sounds wild? Maybe, but we have seen this before. Just look at what happened in 2020 when the Fed signaled lower rates for longer. Bitcoin went from 10,000 to 60,000 in just a few months. History doesn't repeat, but it sure does rhyme. Now, just when you thought this story couldn't get weirder, enter GameStop. Yep, GameStop. The meme stock legend, the underdog of Reddit's Wall Street bets. They just announced another 1.75 billion convertible note offering. Why? To raise cash for their new Bitcoin treasury strategy. Yep, GameStop is buying Bitcoin, big time. In May, they bought over 4,000 Bitcoin for about 500 million. And now, with this new funding, they may double or triple down. Think about that. A publicly traded US company pivoting its balance sheet toward Bitcoin. This isn't a tech startup or mining company. This is a retail brand most of us grew up with. They are betting on Bitcoin as a store of value. It's a bold move, but it's also part of growing trend. Corporate treasuries, ETFs, state-level Bitcoin reserves. The money is flowing in from all angles and fast. So the question becomes, what happens when everyone wants a piece of limited supply? Spoiler alert, price goes up, way up. Okay, let's shift gears for a second and talk politics. I know, not everyone's favorite topic, but trust me, this matters. Because something historic just happened in Washington. The US Senate, yes, the same one that's usually a gridlock, just passed its first major crypto regulation bill. It's called the Genius Act, which, yes, sounds like something Iron Man would draft, but it stands for Guiding and Establishing National Innovation for the United States Stablecoins. This bill sets standards for how stablecoins, those dollar-pegged digital tokens like USDC and USDT, are issued, backed, and regulated. Why does this matter for Bitcoin? Because stablecoins are the plumbing of the crypto economy. Without clear rules, big players stay on the sidelines. With the clear rules, doors fly open. And the Genius Act, it passed with a bipartisan support. That's rare, and it signals something huge. The US is no longer ignoring crypto. Lawmakers are starting to take digital assets seriously, and regulations equal more clarity, equal more adoption. These dynamics could supercharge ETFs inflows and reinforce Bitcoin's evolving role in global portfolio. Translation: buckle up. Still not convinced? How about we bring in a billionaire? Paul Tudor Jones, legendary hedge fund manager, went on Bloomberg this week and said, Bitcoin should be in every portfolio. Not maybe, not if you're feeling risky. He said every single investor should own some Bitcoin. Why? Because the US is in debt trap, he says. With over 34 trillion in national debt and rising, the government will likely let inflation run hot. That means keeping interest rates below the real rate of inflation. So it's easier to pay back debt with the cheaper dollars. In that kind of environment, traditional portfolios lose purchasing power. So Jones says, hedge with Bitcoin, gold, and stocks. But Bitcoin, he's particularly bullish. He called it the best tool for wealth preservation in a high-debt, inflation-prone economy. And this guy doesn't just talk. He runs a 16 billion hedge fund, so yeah, his words carry a weight. Alright, let's bring it all together. US inflation came in lower than expected. That means the Fed could start cutting rates this year. Markets are pricing that in, bullish for Bitcoin. Bitcoin broke 108,000 and is eyeing a 120,000 with the targets of 138,000 by summer or 200,000 by year end. GameStop just raised another 1.75 billion, likely to buy more Bitcoin, joining corporate treasury trend. The US Senate passed the Genius Act, giving stablecoins legal clarity, another green light for crypto adoption. And billionaires like Paul Tudor Jones are saying Bitcoin isn't optional anymore, it's essential. So, is Bitcoin going to 200,000? No one can say for sure, of course, but the stars, they are aligning. If you found this helpful or if it made you think differently about Bitcoin, don't forget to hit that subscribe button so you don't miss future deep dives, give this episode a like to help others find it, and drop a comment below. Do you think Bitcoin can hit 200,000 this year? Are you stacking sats, sitting on sidelines, or still skeptical? Let me know, I read every single one. Thanks for hanging out, and as always, stay curious, stay smart, and I will see you in the next one.